fiat against gold is how governments do an overnight currency revaluation. And so until the banks and the governments are ready to actually execute that piece, when confidence is lost, when the public loses the confidence, then you can expect to see some level of price suppression. Now, that is, to me, it's an advantage for the moment because it enables you to continue to accumulate really cheaply. So there is definitely hope because I too only buy the physical metal. And as we know, the reason why I'm doing it is to protect my financial future, my family's financial future, and what we all work so hard to achieve. So yes, you have a lot of hope because over 4,800 times in history has told us the same thing. I'm not saying that the spot price of gold won't move between now and then. We have a really interesting occurrence that's coming up at the end of this month with Basel III in Europe and gold being moved into a tier 1 risk-free asset. And so I think we will probably see some movement from that. And I think that's one of the reasons why we've seen some downward pressure on gold going into it, because today's what, the 23rd, and this is supposed to happen on the 28th. So yeah, just keep accumulating, just like the central bankers are doing. They're accumulating. And gold performed for them exactly what it was supposed to during the coronavirus pandemic. It is your savings. It is your lifeline to make sure that your wealth is protected. The physical market is, even though it can be guided by the spot markets, the paper markets, it's also its own market all on its own. Well, short term, there's really probably not a whole lot of significance other than looking at it from a technical level and breaching this level or that level. But on the long-term basis, then you can actually still see the trend pattern. Though honestly, the most important trend pattern to look at is not on gold and silver. It's not on the stock market or the bond market. It's actually on the purchasing power value of the currencies, whether it's the dollar or the euro or any of them. So that's why. You can see a long-term trend by stepping back. Short-term, does it really matter? Probably not, because it's so easy to manipulate. But longer term, you can see the trend. The dollar has gone through evolutions, but what I'm talking about is hyperinflation. So what we've seen, like in Venezuela, is a great example. They've already done 2 overnight revaluations where they have lopped off zeros, and essentially the currency has lost 99% of it has no purchasing power value. But that's what I'm talking about. It's an overnight revaluation against gold, and then the markets also get revalued. Everything gets revalued in terms of that currency. Historically, I don't know why it takes this long for people to really believe or to lose all confidence in the currency, but on average, they do that overnight revaluation where they lop off zeros, put time stamps on money, etc., 3 times. And at that point, all confidence in the currency is lost. You know, the first time people are hopeful. The second time they're still hopeful. But by the third time, they know that it's not going to change anything. So that's what I'm referring to. I vehemently disagree with them. I think that it is not, you can look at the hyperinflation in the stock market and in the bond market, but once it starts getting out into the community market, because they want that velocity of money to rise. If you listen to the politicians, what they're saying is that they're going to try and grow their way via inflation out of the current economic climate. So I think they're absolutely wrong to think that all of the abuse, all the money printing and the abuse that have gone into the system has absolutely no impact. I think it's wrong. And look at the inflation that we're dealing with now. Do you think it's transitory? Well, you know, some of it's pulled back a little bit, but I don't think it's transitory either. So I strongly disagree with that. And the only way to deal with all the debts, I mean, you have to keep in mind too, that's how money's created in the current system, is via debt. And even in the new system, the CBDCs that they're talking about, they're still talking about that being debt-based. Well, let's see, can you grow debt forever and ever and ever and not have a consequence? Could an individual do that? No. But a corporation, if they're given free money, they can do it more than an individual can. And a government with a printing press can do it even longer than that, but they can't do it forever. I think we will see a hyperinflationary depression, especially once UBI kicks into full gear. And they're going to have to do that to get people on a normal level to be able to spend consistently. The market is so overheated. It's been so overheated for a really long time. And we've got central banks that are saying that they are not going to raise rate. They're talking about cutting back on it's hard for me to call them asset, but the bond purchases that the central banks have been doing. So I think we're in the melt up phase. You know, every time the markets start to throw a bit of a temper tantrum like we've seen, well, then they trot out, the central banks, the Fed trots out and says, don't worry, we're not going to do anything. And we're going to wait until things are better, and then we're going to normalize. But hasn't that been true since 2008, since the QE that they started then? And when they attempted to quote unquote normalize, not even buy less, just roll off their balance sheet, what happened? Well, they couldn't do it because we've become so addicted. By we, I mean the banks have been so addicted to all of the debt and the money printing and the free money that they've been given, that the risk is that they can't do it. They'll never get us out of it. And that's why we've got to go into hyperinflation. There is no pristine. And actually, you remember the TYVIX, which they no longer publish, which is on the 10-year Treasury. And you could watch as it was the foundation of the markets. And then as in 2008, when it became more volatile, and in 2013, when basically control of what's supposed to be the foundation of the markets was handed over to the Treasury, where we see these huge swings, which is probably why they're not publishing it anymore. So yeah, I would agree with you that there is no pristine collateral except for physical gold.